Hey guys, Scott Phillips from Scott Phillips Trading here. I just saw something on my Twitter feed which was kind of interesting. I screenshotted it and I thought we'd discuss with a view to what's happening in the markets right now. So this is Mark Minervini, who's a market wizard, very good stock trader. He trades momentum-based stock systems, really good at it. He's got a good book if that's your sort of thing, and he's talking about he starts with the daily charts and then consults the weekly, which is what I do too. And I want to show you how we can put what's in context with the daily in context with the weekly and see if we can use that to gain more information about what's going on. So if we look at the Euro US dollar, which is front and center in the news, the dollar's falling apart. Let me see if I can remove this. Hold on. Of course, NinjaTrader, you suck. Okay, ignore that window. That's just NinjaTrader being stupid. Okay, so what we have is an up. The first thing that we want to look at on a daily chart or any chart is it an uptrend? And you know, an uptrend is an uptrend if it's obvious to a 5-year-old. Anyone would say that market is going up. So that's the kind of thing that we are very quick to label an uptrend. And if we look at it, we have a retest of the lows here. We have a strong kickoff to the move. We have a gap and go. This gap, which has no sign of a gap fill, is a hidden sign that the bears are very weak here. And we have on the upside, we have big strings of multiple up days in a row with very little overlap. And on the downside, see how everything's choppy, overlapped. So what this is telling us loud and clear is that these sideways periods are just working off overbought momentum, and the ease of momentum is to the upside. And it's on cruise control. The bears can't win anything. Bulls have got it on lockdown. So we look at that and we go, wow, this is a market that I want to be long, and it is. But if we drop back to the weekly chart, we can put things more in context. So if we look at the weekly chart, we have a long-standing trading range, and the top of the trading range is somewhere around here. And the bottom of the trading range is somewhere down here. Sorry, NinjaTrader's annoying me today. Okay, so we can see what happened. This trading range has been going on since 2015. Now, before this trading range, we have a very clear downtrend. And for these first couple of legs here, the odds are very strong that we get continuation to the downside. But as that continuation doesn't happen, you can see every time it gets close to the lower boundary or shoots below it, we have buying pressure jumping in, and it's messing with the shorts. So what we have here is a situation where we're coming very, very close to this old spike high here, which is about where we should see selling pressure coming in. Now, the correct way to view these old spike highs, these old support and resistance points, is as a test. So there's absolutely nothing predictive about them, but you can treat this as a test, pass or fail. So it's coming up to an inflection point. So the odds are, if it gets above and holds above one of these spikes, it's probably going to go quite a lot further, because all of the selling pressure is going to come here, because this is the logical place to sell. If I'm a short, I don't want to short any of this, which is why the bulls are winning now, because the odds are strong to me that we're in a trading range. 80% of the time in a trading range, it comes up to test the top of the trading range. We're almost there. We're not there yet. It's not the time to go short, but within the next couple of days, we almost certainly will see some selling pressure. Now, whether or not that selling pressure is enough to stop this incredibly strong move, nobody knows. Like, I don't know, you don't know, but what we do have at that point, we probably have a risk reward odds which are favorable, because if you look, the potential downside if it goes down at least to the bottom of the trading range, compared to the upside that you the amount that you set to gain on the downside compared to the amount that you're risking on if it goes on the upside, totally out of whack. So even if it's only a 30% probability, there's a 5-bagger in that if it works, right? So this is the type of trade that we should be on the lookout. Now, with that in context, if we go back to the daily, why is it so strong? And this is something that we see on every time frame, is that this market this market strength is partially explainable. First of all, we had this false break out below of the trading range here. That false break got early shorts involved. Those guys have to cover. Those guys are all covering in this early period of the action. This is Euro USD shorts just giving up, and this point here is when they've given up. But after one side or the other has made a mistake, the shorts have made a bad mistake getting here. They have to cover. They're weak for a while. They've just got no power to make an effective comeback. They've got no selling pressure. They can't really do anything for a few bars until they start to get their act together again. And by this time, we're sort of up 3/4 of the way to the top of the trading range. Why would I short 3/4 of the way at the top of the trading range when I know that almost certainly it's going to get right up the top here? So if let's say I'm shorting right here. So what's my risk and what's my reward? My risk is from the entry point up to the top of the trading range, and my reward is down to the bottom of the trading range. So we probably have 2-to-1 risk rewards odds, but there's no way that I would do that trade because I know that almost certainly I'm going to be able to short at a better price up here. Now, as it gets very close to this trading range, as it gets close to the top of the trading range, especially if it goes 80-90% of the way, it's almost certain to go 100% of the way. So what we're seeing is what I call a vacuum. So nobody wants to go short here. Nobody's going to go short today. Like, we're going to wait until it tags there, and then we'll see what sort of ammunition the shorts have. Now, we have no idea of the odds here, but what we can see is the risk return. And the risk return is going to be incredibly favorable once it gets there. So what does this mean if I'm long on the daily chart? It means that I'm long and I'm looking to take profits. That's what you do in trading ranges. In trading ranges, the absolute optimal strategy is to buy at the bottom of the trading range and sell near the top. That's just what you do. So sooner or later, all these guys who've been long this whole time, they're going to want to take profits. And they're going to want to take profits somewhere in this box. And so we're going to see that in the next couple of days. It's something to keep a lookout for, and yeah, I'll see you again shortly.